Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show, episode 76. Good morning, AJ. How are you doing today, sir?
Good morning. How are you? I'm doing well.
Awesome. A lot of excitement in the news, lots of information. The markets are starting to pick up. Where exactly do you want to start? I feel like this week's headline news was inflation, right? And then today I feel like it's bank earnings. How would you characterize what we're looking at this week?
Well, a lot of it, in one sentence, people are trying to guess what's happening with the Federal Reserve in the beginning of May. So we're not that far away, maybe 3 weeks away from when they meet again. You know, this week was our monthly week where we get all this economic news. We started off on Wednesday with the Consumer Price Index, and then we went on Thursday with the Producers Price Index final demand. And then on Friday, that's today. This morning we had retail sales and then industrial production. So this has been kind of a seesaw with these different reports. Plus, on Wednesday afternoon we had the FOMC meeting minutes released, and then a whole bunch of comments from different Fed presidents from different regions. So CPI came in. This is the Consumer Price Index, the inflation that we see. If we take a look at the CPI shows that the Fed's actions really have been taking hold. I mean, year over year, we're down at the lowest increase in inflation that we've seen in like 2 or 3 years, especially when you start to factor out the more volatile food and energy. So in the beginning on Wednesday, everybody was excited. They're like, hey, the Fed's activities are working. The Fed probably will want to stay the course. But then, of course, in the afternoon, the FOMC meeting minutes came out, and they were very hawkish, meaning that the Fed wants to take even more actions. And then interviews with those regional presidents were also on the same page, meaning that the Fed wanted to be more hawkish. They wanted to do more activity. They didn't want to just take a month and chill out. Then you saw the Producers Price Index. Producers Price Index also showed that the Fed activities have been working. And then retail sales today, that report's not coming up very quickly. Neither is the industrial production. Sometimes they take a moment to load. Here's retail sales. Retail sales show that retail sales have been pulling back quite aggressively, more than expected. Pretty much all of the reports, SIP, have been saying that the Fed activities last year are taking hold.
That's kind of shocking, right? What the Fed was trying to do, it's working.
It's working, absolutely. And so, but still, the Fed says that there's more work to be done. And so Wall Street kind of this week has been wrestling with that idea. They kind of want the Fed to be done doing activities that are going to mess with their stocks. It's like kind of like if you were playing some sort of sports game, like hockey or soccer or football, and somebody kept moving the goalposts. You're like getting all set up to score a goal, kick a field goal, whatever. And somebody's like, yeah, hold on. And the ref moves the goalpost like 10 feet to the right. And you're like, what WTF? Well, that's basically what the Fed changing their policies does to investors. You can't make long-term decisions if you don't know what's going to be happening with the goalpost. So as of right now, you can see my graph on my screen. Investors have gotten even more resolute that the Fed is going to raise rates by another quarter point in May. And so that's what we see here. We can also see when we look at those bond selling and buying activities that this was the 2 weeks where the Fed was trying to bail out those mid-sized banks, but now the Fed is right back into selling bonds. So, the Fed is tightening, and that's kind of the news out there.
And in part, also, it seems like some of these top line banks are are showing profit,
Yeah.
are like resilient, and so it eases any of those financial worries
Yep.
that we had a few weeks ago. Although I read an article where they're like the influx of deposits into J.P. Morgan Chase was like X amount. And I was like, oh well, that makes a lot of sense, right?
Mhm.
Everybody put their money into the bigger banks, and
Yeah.
so
All those
um,
midterm banks, like we saw last week when we were looking at some of the banks, their charts, they're at bottoms. They're kind of hovering at their lowest stock prices because yeah, there was a huge depositor run on mid-sized banks, small banks, and the big banks have benefited, and earnings is showing that.
And so, with all this news and the forecasting of the potential quarter point increase, the
Mhm.
market is has been on the up, has been moving up
Mm.
from the news, right? Like looking at the chart now, like we're kind of making up for the previous month almost.
Yeah, yeah, and it's kind of weird. So check this out. I'm going to go ahead and throw in our study that helps us determine whether or not the market is done in its current little short-term uptrend. And so we know it's done when we get a crossing of this blue line down below this magenta horizontal line. And look, it's totally duped us yet again. It was coming down and it was going to say, hey, this right here, we were thinking that this was the high, and this was going to tell us, yes, it was. Usually it's called a lagging indicator. Usually it's a few days after. And so we were totally like planning on the fact that this was the high. And then it's like in the last 2 days, in fact, just yesterday and then continuing today, it's like, nope, we're going to go a little bit higher. So yesterday's close was the highest high. And now we're wondering, when will we get confirmation of yesterday's close so we can take a little break, right? Because, yeah, it looks like we're in a short-term uptrend. But in order for that short-term uptrend, and I think people have to really listen to this because short-term uptrends that aren't mature can be very risky to trade directionally. And so the scoop here is, in order for us to get a mature uptrend, we need to pull back and test this ascending level of support at least one more time before we keep going up. So it's time that we take a break from our current little rally, have what we call a contraction phase, even if it's only for 3 or 4 days, have us pull back just a little bit and then head higher. And that would give investors that read charts, investors that have any kind of confidence whatsoever, a little bit more comfort believing that they can trade this uptrend. We also have that overhead resistance at about, it's like at 4,150, something like that. So we're coming up against that overhead resistance. Maybe this will be a perfect time for us to take a pause.
Yeah, it looks like we're only like 20 points out on the S&P of getting there. And so I would assume that counter to this, the VIX has been falling because things are settling down.
Yeah, I think that there's an overall calm. So you can see right here, here's the VIX and here's our average from the beginning of time. So we're definitely trading on the VIX below the average. And just to refresh our participants, the people who are checking out either our live show or the replay of our live show, when the VIX falls below this line, and this line is roughly at about $19.50. When the VIX falls below that line, it means that there's a confidence or comfort in investors. What it really means is that investors are not buying options in order to hedge their long-term investments. Options are a way of limiting risk. And so they're not buying these insurance policies, and the price of options, the implied volatility on options is going down. And that represents that there's an overall kind of calm and confidence. But I got to tell you, one more episode like the banks, the mid-sized banks failing like they did last month, I think investors are very trepidatious right now because they know that things could break on a dime. So that's why they're watching that Fed so much. One more time, just looking back at the S&P 500, you could see that until yesterday, until uh, Thursday, April 13th, the market was in about 8 trading days of just sideways movement, of people being like, I'm not ready. I'm going to sit on the sidelines. I'm not ready to buy or sell. And it was just some good news yesterday that caused some buying.
Yeah. And I imagine that in some of the examples that we'll go over today, there's going to be similar patterns because we have been seeing that trend over the previous few shows where a few of the names were starting to bottom out, and we were just waiting for confirmation to put that trade on. And so, as you mentioned, for anybody listening or watching for the first time, AJ and the team at Trading Trainer utilizes option strategies to take advantage of everything we just discussed, the market going up, the volatility. And so later on in the show, we're going to go over AJ's pick of the week. We've also got some names that some guests have asked us about this week that we'll go over. But as always, because this is live, if there's a name or a ticker that you want AJ to go over, feel free to drop it in the chat, and we'll see if we can, we'll have some time to go through it. Let's go ahead and give everyone an opportunity to learn more about these strategies and AJ's approach to the markets. And so we just threw a link in the chat to his daily workshop where he goes over the strategies, tells you the best way to implement them in your portfolio, your risk setting. I believe later in the show, we are talking a little bit about risk. So we'll be touching on that. We've got a little commercial that we'll play to hopefully entice you to head on over to the webinar. We'll take a little break. We'll be back. We'll talk a little bit of current news, a little bit of risk, AJ's pick of the week, and any of the names that you guys drop in the chat. Stay tuned, folks. We'll be right back. Whoop. Moving my mouse to it. We'll be right back, folks.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
It's almost that time again, AJ. The weather's starting to pick up. The sun's coming out. The markets are calming. Exciting times all around. So just looking at some of our show notes today, you never struck me as an Adderall guy, but you're telling me there's an Adderall shortage going?
I mean, the Adderall shortage is a real thing. It's amazing how many people are taking that drug, and it's putting a shakeup in all the pharmaceuticals. So if you're invested in pharmaceuticals, I think that this is what we call a transient external stochastic shock, which means if you're in pharmaceuticals for the long term, you just don't look at the news, right? Weather the storm, because it'll be fine after the news passes and the supply chain and the demand balances out again on Adderall. But if you're trading it in the short term, there are opportunities in the pharmaceutical. Implied volatilities have gone up. So if you've got some option strategies under your belt that deal with implied volatility rushes, you might be able to profit on this.
One time in college, I took an Adderall. The only time I ever took anything of the sort. I couldn't sleep for 3 days, and after that, I was like, "I'm never again. Like, this doesn't work for me."
Yeah.
Okay. NASA, Ingenuity breaking record.
Ingenuity is that little helicopter that they brought up to Mars. And so Ingenuity wasn't even supposed to last this long. It's lasted over 2 years now, and it just in this past week, it broke a record for how high it can fly, and also how fast it flows. So I thought that was pretty interesting. Anything that NASA does winds up, they're basically a big testing bed for some of the stuff. Like, think about the Tempur-Pedic mattresses you guys are sleeping on and all of that good stuff. So being able to fly helicopters around on Mars and having, this organization design things that way surpass expectations, not a bad thing.
Hey, I think most of us would all support the NASA endeavors. Seeing as how global warming's changing, right? I don't know if you're seeing the stuff out of Fort Lauderdale, but it is really bad down there. I'm shocked.
I'm shocked at what's happening here in Washington, D.C. We're supposed to be having spring, and instead it's 90 degrees. We've been having record-breaking 90-degree days. So, yeah, we better get ready to colonize some other planets.
And then finally, on the short notes, Easter spending is on the rise.
Yeah. And so I wanted to bring up this chart. We've brought this up in the past, and this is kind of the Bureau of Economic Analysis. You guys probably don't even know that all of this data totally exists out there, but the Bureau of Economic Analysis keeps track of income, that's this blue line, expenses, that's this red line, and how much we've got in our savings accounts. So if I pull them out individually, so if I get rid of spending and I get rid of savings, you can see that income's been on a rise. And that's one of the things that the Fed has been trying to control is, how fast incomes appreciate, because that's part of inflation. Inflation is not just what things cost at the store, but also what they're doing here. And then you come into spending, and you'll notice sorry, I'm moving my cursor all around. You'll notice that spending has started to flatten out. This was the holiday season, the winter holiday season. But for the most part, if you look at October, November, and now January and February, you can see that people are actually starting to tighten their wallets. We're even starting to see it in the services. So incomes are still on the rise, but spending has started to stall. And if we take a look at finally the savings, we were worried because people were dipping into their savings the last half of last year. Well, guess what? People stopped spending. They realized that, there's some shenanigans going on, and so they're starting to do this saving. So this is all evidence that what the Fed has been trying to do is starting to work. So I want to keep emphasizing that. But with that said, coming back to spending, they do expect, and I don't know if it's American or Americans like DNA or something, but they sure do like to buy things. And so this Easter holiday we don't have the numbers yet. Like retail sales that was reported this morning was for like the month of February and March, right? It wasn't for April yet. And so we're expecting to see retail sales the next couple of months for this Easter season be through the roof. People just like any reason to buy.
Yeah, the bunny merchandise has been flying off the shelves.
Totally.
Real quick question on that income chart, and that's it. We would want the income to continue to rise, right? Versus the spending, right? Like, would that still be okay in theory, or do we want the income to flatten as well?
We kind of want people to stop getting raises. That's what the Fed is saying. Because if people are getting raises and expenses are still getting higher every month, I mean, so this is the difference if you take a class in college between micro and macroeconomics, right? Microeconomics, meaning in your personal household, of course, you want more money coming in than you're spending. So you'd love to see yourself get a raise. But on the macro picture, if everybody gets a raise, that's kind of unsustainable. And what that means, especially with services, because when I go to buy a restaurant meal and my server and my manager, and they're all getting raises, I'm going to have to pay more for my meal, right? And so these things can kind of snowball effect, and that's what the Fed's been trying to control. So we actually want to see prices at all, whether it be the supermarket or the restaurant or streaming services. We want those prices to stabilize and stop going up. but that means we probably have to stop giving people so many raises that we're giving them right now. So there's this huge balancing act.
Yeah, interesting. So I do like seeing that the savings is going up. I think that that is just one. I think it's a good seasonal turn, right? Coming off the holidays, and then just people adjusting to things being more expensive, but also the awareness of, hey, maybe we need to not spend and save the money because who knows what's going to happen. And if enough people do that, it seems like we might be able to weather the storm. So uh, definitely like seeing that data set moving in that direction. All right, let's dig into this week's trending topic, but I think
Yeah.
it's one that we've discussed multiple times. I think it's a topic that you've been discussing since you started training trainer and started
25 something years
right
ago.
started in this wonderful world of investing, and that is planning for risk, right? And I
Mhm.
imagine that when you're dealing with options, that kind of is naturally put into the instrument, but
Yeah.
it sounds like you have a approach that you also incorporate with the tools. And so let's discuss your approach to risk, and maybe we could educate some of the viewers on the parallels of the risk and the reward and how you use your tools and strategies to become a successful trader essentially.
Yeah. I mean, the scoop is you would use what I'm about to tell you in any type of investment or even endeavor, right? Because risk is all around us. It's not just risk um, in our financial and investing world, but every time you even go and drive your car, you're taking on a potential risk. And so what you kind of have to think about is what is the worst case scenario? Like, what is the worst that can happen to me by doing this activity? And a lot of people don't think that. They only think about what's the best thing that can happen to me if I do on this activity, if I take on this activity. But you got to if you're smart, you figure out what's the worst thing that can happen and you define it. Like you'd say, the worst thing that can happen is if somebody sideswiped me, or somebody did a head-on crash or something like that, and you define what that would look like. What would that mean? It would mean like somebody is coming at you, there's a connection between your two vehicles. You define that. You'd also define, if that happened, how much loss would you suffer, right? So you have to define those two things. One is the worst case scenario, and then the loss resulting. And from that loss resulting, you can then decide, well, man, I need to limit that amount of loss that I can overall see in my life. And so the way to limit that is to limit your time or the amount of effort or the amount of anything in that activity. So for instance, if there's a lot of risk in something, then maybe you only do it once a month so that you minimize the amount of chance that in your lifetime you could have that problem, right? And so you size your position, how much you put into this uh, transaction appropriately so that you can manage the maximum risk that you might get into if the worst case happens, to the amount of risk, your appetite for risk. So you have to match that through position sizing. And that totally translates into what we do for any sort of active investment or trade. We analyze what would be the worst case scenario and we define that. Like, this is the worst thing that can happen to me. Implied volatility goes down a half a point. Underlying symbol price changes by $10. 5 days passes by. These are all influences on an option price. So you figure out and you define the worst case scenario. And then you say, if all of those things, if the proverbial poop hits the fan, what indeed would be my loss? And you calculate that loss. And from that loss, you then decide, if I can only suffer this much loss in my portfolio, how much scale down of the position should I make? So if, for instance, the loss in a particular position could be as high if the worst thing happens as 10%, and and you only want to lose $2,000 or 2% of your $100,000 portfolio. Well, then you have to shrink your position, the amount that you'll invest in that one investment, to $10,000 or maybe $20,000, because then if you lose 10% of $20,000, that's only $2,000, right? So you have to shrink. You can't put your whole $100,000 portfolio into that one investment, because if the worst case thing happened that you defined, you'd lose $10,000 and you only have an appetite for 2,000. So you have to size your position accordingly. And then here's the piece that a lot of people ignore. Then you have to put into your trading plan, your active investing plan, you have to define and use that definition of the worst case scenario to create targets. So long as you do better than those targets, so long as you exit the position before implied volatility drops to that max level, or so long as you exit the position before the underlying symbol price changes, or so long as you exit the position in a week, you'll be doing better than that worst case scenario. There's no way you could ever, even approach that worst case scenario. So it's a two-pronged approach. One of them is defining the amount of risk or loss that you might have and sizing the position accordingly so that it's within your risk appetite. But then it's also sticking to your plan and using that definition of what is the worst case scenario to guide you so that you don't ever experience the worst case scenario. So long as I know that if I see a car coming at me straight on, that I have to swerve, I'm already ahead of the game, right? I've already defined what the worst thing is and I can take action. But if I don't know what the worst thing is, or if I've defined it and then I don't incorporate it in my plan and I ignore it, that's what a lot of people do. They're like, well, I knew that, I wanted to put a stop loss at a 10% loss, but it looked like it was going to be okay, so I ignored it. Well, then you just defeated the whole purpose. So that's how we do it here, Sip.
Yeah, and it seems like if those that have never traded options or looked at options, that risk is naturally built. The risk and reward is naturally built into buying a call or selling a put, right? In that there's these execution prices that when a stock or underlying asset hits it, something happens, right? So that's kind of the advantage. My question to you is the risk reward in your strategy, in your approach to finding investments. Do you look for a 2-to-1, 3-to-1? Is there a number on the reward side that you're always seeking to counter the risk?
Well, so the cool things about premium selling, which is where my specialty really gets into, that we like to create income out of underlying symbols that otherwise wouldn't be tradable. What's really cool about ours is as time goes by, because time is one of those variables that either can really hurt you as an options trader if you're always just buying options, or it could really benefit you if you're in the world of selling options, which is what we teach to do. Time is then your best friend. So as time goes by, that risk reward ratio actually tweaks. And the longer we stay in our position, we actually get very often within 3 or 4 weeks of placing the initial trade, our positions actually wind up having zero risk and all reward potential. So the time is our best friend. And the most critical part of our positions is like the first 3 or 4 weeks when you're doing your initial first time premium selling. But then each subsequent time that our options expire and we collect premium, it becomes all frosting on the cake. So our risk reward ratio is actually keyed into time. And so we focus really heavily and get really anal about setting up our position so it weathers the first 3-6 weeks. And then once it's done that, it's kind of like it just makes money and there's no risk on the table. In fact, you're guaranteed, even if the worst case scenario hits you, you're guaranteed still a minimum amount of reward, and it grows every week.
Yeah, and so you're saying there's no really defined reward number. Time kind of can dictate that and be 4 times, 2 times, 1.1 time, right? Sometimes break even, right? And then but the fact that the time is in your favor, that's you're implementing that into the strategies. And so
Yeah.
we'll go over a couple examples because that's kind of what we do here in this
Yeah.
second leg of the show. And I feel like this first name is one that falls in line with what we've been talking about, right? So the banking sector got hit hard today. Some of the names are coming out and they're saying, hey, we're actually making money. And so I believe Wells Fargo is one of the names that released earnings and is making money. And we had a nice potential setup last week specifically.
Yeah, and so I wanted to bring this guy back just to follow up really quick. We definitely have gotten, so we got a signal back on March 27th, but that signal was not validated, right? We totally were telling people, make sure you have volume validation, make sure you have price action validation. It looks like we had gotten maybe something like that on March 29th, but then it didn't play through. It just didn't play through. My automatic traders, I use a lot of automatic traders because I don't like to be there during the trading session. Didn't play through, but just the beginning of this week, everything lined up. We got our signal, we got our follow through. And so I was able to start my initial positions here. I think we paid just around $39 per share, or if we bought some back month options, whatever was keyed to that share price. But it was triggered at about $39 when we got our building volume, our great price action, and then the next day follow through. So I wanted to just feature Wells Fargo because everything we talked about last week played out in the beginning of this week.
And so then there's two approaches, right? Either you could buy the stock outright, or like you like to leg into the position with something that's further out in time, correct?
Exactly. So you could do the stock. That's always that's a typical covered call. Or instead of buying the stock, you could buy that less expensive, far out in time, deeper in the money substitute option. And so we pick that option specifically so that it's keyed to the underlying symbol price. It behaves like the underlying stock, but it's cheaper. It involves a little bit of leverage. So either one of those worked good here. And then you've got your initial covering position at this point, and now you're looking for the opportunity to sell premium and buy protection.
Yeah, maybe even take a look at the earnings report since it's fresh and it just came out, right? So that's the take on Wells Fargo. Let's review another name from last week for where we're at with it. And this is Rocket Mortgage, ticker symbol RKT.
Yeah. So I've been looking at Rocket Mortgage. I wanted to draw people's attention to Rocket Mortgage. Let me go ahead and back up a little bit. I'm going to go to a whole year. So you can see Rocket Mortgage has been in this sideways channeling pattern. And you can actually see that Rocket Mortgage, first of all, it's affordable. So it's under $10 a share for the underlying symbol. It's got the liquidity and the option chain that we look for, because one of the things that we have to check additionally for is to make sure that people are trading these things, and people are definitely trading these things on both the call and the put side. So we've got a lot of activity. I'm looking right here, by the way, at the January 2024 expiration. This would be the options that we're thinking about to use as a substitute. And so what I wanted to feature about Rocket Mortgage is a potential top being found. So in this case, instead of buying the stock, we would short the stock. And you can only short the stock if you have a margin account, so keep that in mind. But there is an alternative, which we've been talking about. You can substitute the shorted stock by buying a deep in the money, far out in time put. And so that's what I was looking at this morning. I was looking at this one over here. I like to compare the extrinsic price to the mark price. So I was looking at this one. That's approximately 10%, right about here. There's this $15.99 strike price option right here that is expiring on January 19th, 2024. It's going for about $7.12 right now as we speak. And so this might be the option that I target. And this would turn that margin trade into a cash trade. And it would set me up for selling put premium, not call premium, put premium. So this would be the initial covering position so that when this thing dips down, we would go ahead and think about selling put premium. So it's a little bit different. Everybody thinks that premium selling is only covered calls. That's by far a fallacy. In fact, covered calls are maybe the strategy we use the least. This is covered puts or a bear put diagonal debit spread. We got a signal on yesterday evening, and we're waiting to see if today or maybe even Monday would be a good opportunity to buy one of these deep in the money, far out in time back month puts as our initial covering position and setting us up for selling put premium in the future.
Is there a correlation with the interest rate hikes and the mortgage business in general? Like, if we continue to raise rates, does that slow this company's potential down?
It's, in fact, I would actually argue it's less about the interest rates because that's more of a mental game. And the direct thing is coming back to this chart. And whenever the Fed starts selling these bonds, that's going to affect those mortgage rates quite aggressively. And mortgage rates, we expect mortgage rates to continue to go up over the next month. So, yes, it's the interest rate hikes, but it's even more this behind the scenes bond selling.
All right, cool. Well, that's the great part about this show is we've got potential moves to the upside, we've got potential moves to the downside, we've got potential moves for if the market goes sideways. And so let's see if that's the case with any of our this week's speed round questions. All right.
Yeah.
And
Yep.
so let's head over east to Watertown, Massachusetts. And Samantha wants to know your opinion on airliner JetBlue, ticker symbol JBLU.
JetBlue. We talked about that a while. They're coming up with some earnings, so that's something to keep in mind. On April 25th, they'll be releasing their earnings. In the meantime, I like it. JetBlue, again, I like these lower priced symbols. It means that a lot more people can afford them. We did get, we're getting some confusing signals down here on our fast MACD. We're not getting much volume validation. What that tells me is that investors are kind of waiting to see, is this really a bottom or not? So I think that this is going to materialize. It'll probably materialize after earnings, but we can be watching it in the evening. I wouldn't watch it during the day. I would just check in with it for a few seconds every evening to see what it's done during the previous trading day. But I have a feeling you're going to be waiting until earnings. But, listen, Delta Airlines just reported theirs earnings, and it wasn't that bad. They're making, continuing to make profit, and sometimes in the airline industry, especially with very volatile fuel prices, that's hard. So I don't have any problem at all believing that JetBlue will do well, especially with their latest acquisition. I think that it was Spirit Airlines that they acquired. Isn't that right? That was the big news last year.
Thank God. Thank God someone came in and saved Spirit.
Yeah. And so, I think that there's an opportunity here for a covering position. So in this case, you would either buy the stock or you would buy the deep in the money far out in time call for a bull call diagonal debit spread. You just got to wait for the signal. And we talked about this a lot last week. So if people don't remember, you might want to go review our workshop or our show from last week, where we talked about how important it is to get not only your signal, but volume validation and price action that validates that symbol. I would make sure you don't shoot your gun until you see the whites of the eyes. But yeah, I like it.
Yeah, I feel like there may be some pressure today from Boeing. I think Boeing was down like 5% from
Yeah,
for like some sort of issues with their production.
of the
I mean,
737.
I don't know, like JetBlue is the airliner, not the air manufacturer, but I have a sense that they kind of are all correlated on a day to day somewhat. But definitely with the earnings coming up, you might want to be, just a watcher and see what happens.
Yep.
All right, thank you, Samantha. Moving
Thanks,
down
Samantha.
south to oil country. This is Ty from Texas or from Houston, Texas, interested in PBR, not the beer, but Petróleo Brasileiro.
Yeah, that's a good Portuguese you've got there. So yeah, this is the Brazilian petroleum group, right? And so let's see. We do know that OPEC has been playing with oil prices. Oil prices are going up again because of some of the OPEC um, issues, things that they've done. But it looks like the Brazilian Petroleum Company seems to be forming a top here at about $12. This is a great opportunity if we get the signal. I don't see any signal yet, but if we get a signal and it's volume validated and price action substantiated, we could set up a initial covering position in order to sell some put premium. So that initial covering position would either be if you've got a margin account shorting the stock, or if you only have a cash account like a retirement account, buying that deep in the money, far out in time put option. When you buy that deep in the money, far out in time put option, realize it does the opposite of the stock. So when the stock goes up, the option goes down. And so that's how you can actually convert these margin trades into cash trades. It's kind of fun to play with the math, but if you don't want to play with the math, just trust me, it turns a margin trade into a cash trade.
And so what you're saying is we're looking at a potential move to the downside here.
Yeah, but we don't have a signal. We not only do we not have a validated signal, we don't have a signal. So don't be doing this trade until that signal is there and it's validated, right? Because it's up. It does look like just from the last 3 days of price action that it's topping, but until we get the signal, it's only hearsay. It could be like just taking a couple days of breather, and then it's going to break through this horizontal level of resistance. So don't use leading indicators to guide your trading. Leading indicators are only, in my book, leading indicators' only purpose is to get you to look at lagging indicators, right?
All right, cool. Thank you, Ty from Texas. Moving on to our next name. This is over in my neck of the woods, Del Mar, California. This is Pam in Del Mar, interested in retailer Nordstrom, ticker symbol JWN.
All right, so taking a look at Nordstrom. Yeah, okay. Obviously, I've been looking at Nordstrom. I can see my telltale support and resistance lines and all the different thresholds in between. Let me just remove those so I can see a little bit better. So Nordstrom seems to be bottoming, but it's kind of the same thing that we saw with PBR. PBR was topping, at least it looked like it was topping, but there was no signal. I see no signal yet on my MACD for Nordstrom bottoming, but it looks like it's bottoming. So those leading indicators should tell us to start looking at lagging indicators. So a lagging indicator in our world is the fast MACD. And even when we get the fast MACD signal, we'll want to make sure that it's volume and price action validated. So wait for the signal. But yeah, it looks like Nordstrom is setting up nicely in order for us to set up an initial covering position. In this case, we're at the bottom of the channel. So we're going to buy some stock, or we're going to buy some deep in the money, far out in time call options. Let's see if there are any. So I'd probably go out to the January 2024. I'd go deep in the money here. Maybe probably this one right here, the 7.5 strike price. Not much open interest, but if you look at the bid-ask spread, the market makers are in there making this trade possible. So I wouldn't worry so much about the open interest as I would about the bid-ask spread. There's people in there ready to make this trade possible for you. But again, don't pull that trigger until you get the signal and it's a valid signal. It's been validated.
Awesome. Thank you very much, Pam, for that one. You know what? I've got one for you, AJ.
Sure.
One that is a product that I'm a big fan of, that I'm greatly concerned for, but also curious whether there's an opportunity, and that is WeWork, ticker symbol WE. I've been seeing a lot of chatter on Twitter about it, and it is just getting hammered.
Oh my goodness. It really is. Let's go back and take a look at this symbol. Yeah, okay. So the symbol, if I use, so one of our favorite drawing tools, SIP, is a linear regression line. This is if you ever took statistics in high school or college, a linear regression line is basically a best fit trend line. So if we draw this linear regression line from this last time that we plateaued, I have a feeling something happened during this period. Probably this was when they ousted the original kind of founder and tried to bring it under new management. You can see here that WeWork has had kind of, it's now considered kind of in the penny stock range. Let me see regarding options. Yeah, you know, they have options and they're trading every 50 cents, but with it dropping as low as it has, I want to come back to let me come to a 6-month chart. And I'll zoom in here. With it dropping all the way down to 50 cents, the option plays are not there. You know, you almost have to wonder, should you be shorting this stock and taking advantage of it dropping down? As far as the company goes, man, Wall Street's pretty much saying that they don't believe in this business model. So I don't know what to tell you, Sip, but it doesn't look very good for WeWork.
I know, and it's shocking because I'm such a big fan of their product. Like I'm there 2 or 3 times a week, and I've seen them across the country, and they're fabulous. And I've watched the series. I don't know if you've had a chance to watch the
Yeah.
series, but it's just like I guess they just spend way too much money than they make, whether the product is good or not. It's just they can't manage their finances, and it looks like the street agrees with that.
Well, take a look at this. It wasn't that long ago that, I mean, they had a $4.54 per share loss, and the share price at that time was trading about $10. Then the share price was trading at, gosh, like $5, and they had an $18.38 loss. Ever since, though, they've been having losses that were much more manageable, 57 cents, 76 cents, 75 cents, now back down to 59 cents in the most recent earnings. But we talked about this a while ago, and that is any company right now that isn't cash flowing positive, investors are going to be holding you accountable or pulling their investment dollars. And I think that's what's happening here to WeWork. You know, when money is easy to come by and investors are okay with funding some ideas, that's cool. But as a business owner, and anybody out there who wants to start a small business or something, if you take investment dollars, be sure you have a plan on how to, cash flow positive. It's almost more important to cash flow positive than it is to grow, right? I think there's a balance between both, but you have to ride that line. You at least have to be on the verge of cash flowing positive before you start pulling the levers to grow. Otherwise, investors won't feel good about giving you their money. So keep that in mind.
I think the only caveat there would be if you're in AI these days, because that is a very hot sector that is growing fast,
Mhm.
that has a lot of excitement around. Um, So we'll see.
AI has the potential to profit very quickly, though, because if you think about it, it's software, right? And software has always been a great profiting industry because you write it once and then it basically, there's no other hard expenses that go into producing this software. And it used to be like, well, what about the price of the CD? But now you get your software over the web. So there's not even the price of the CD or the packaging that you have to go to Best Buy to buy. So, the scoop is AI can actually be quite profitable soon. So I don't have any doubts that unless there's some sort of ethical stop to AI, that it's going to be as game changing as people have been projecting. Some of the great minds have been projecting for years.
A CD. What's that, AJ? I've never heard of that.
Windows 95, man. Windows 95.
Back when you had to put the thing into the computer or into
And
the
then-
device, they had to read it. The world
And,
don't work like that anymore.
No, it doesn't, does it?
All right, cool. Well, we are we're at the getting into the last 10 minutes of our show here, close to wrapping it up. It's Friday. Is it options expiration? No, that would be next week, right?
Yeah, because April started on a Saturday. April 1st was a Saturday. So remember, it's the third Friday of every month. So this particular, every once in a while we get an extra week in there. And that happened this time. So options expiration is next week. But, we'll be updating our training webinar workshop this weekend with some latest numbers. So that you can see our latest examples. If you go back and watch the workshop, it might be something you like to do. If you like to review that workshop, it might be worthwhile to do next week.
Totally. So the link to that workshop is in the chat. Also, we threw a link into the chat to for AJ's stash, his trading stash, his courses, white papers, trading tools, indicators, videos, all completely free. So if you're looking for more information, more tools, head on over to that link. Sign up. You'll get access to the portal. You can spend a couple hours in there, spend all day. However you wish, it's there for you. It's free, no questions asked. Head on over there. Heading into the weekend, heading into next week, AJ, are we just kind of keeping an eye on earnings? Is that kind of the play here?
Yeah. So earnings season is getting into full force here. We're going to watch earnings. We're going to see if there's any other hints towards Fed. And then personally, my wife and I are going to go put a deposit down on a Fisker. So we're going to go pick some colors and things like that.
Is that a car?
Yeah. It's going to, it's upending the market. In fact, over near you is going to be the first Fisker. They're opening up a Fisker showroom at the Grove in Los Angeles. So you might want to go check those cars out. We're very stoked about it.
Totally. We're going to have to redo that commercial, right? With the Fisker instead of the Tesla.
Fisker. Yeah. We're looking at the Fisker Ocean model.
Ooh. Does that mean it's going to be blue?
It has a button that opens up the whole roof and drops all the windows so that you can put your surfboard in.
Crazy. Definitely going to have to check that out, but love the innovativeness. Is that an electric car?
It is an electric car, and it's going to have like the largest range, and it's going to compete very heavily with the Tesla Model Y.
Okay. Oh, that's like the SUV version, right?
Yeah, kind of a what do they call it? A crossover?
Yeah. Well, you got the kid now, so you got to make sure she's safe.
I still call it a station wagon, but yeah, there you go.
I don't know if those exist anymore in 2023.
The Country Squire.
All right, AJ, thank you for your time. Thank you, everybody, for tuning in. If you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe, hit that retweet, share button. I mean, why not? Help us get some views. Otherwise, keep an eye for some of the clips and content coming out this week. Sign up, and we'll hit you with some informational email. And we'll be back next week to talk all things options trading and investing.
That's it. Yeah.
All right, folks. We'll catch you next week.
Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.